It is a very busy day on Wall Street, so let's get right to the top 3 things that you need to know as the clock hits 9 a.m. Futures are in massive rally mode after CPI rose less than expected in November. The consumer price index rising just 0.1% from last month. Economists were expecting 0.3% in a rise. It's the slowest increase in more than a year.
And headlines rocking the crypto world. FTX founder Sam Bankman-Fried has been arrested in the Bahamas. Also, Binance temporarily pausing withdrawals of stablecoin USDC with investor fears mounting over the FTX collapse and its tendrils.
And we've got a slew of executives on deck this morning. We'll bring you interviews with United Airlines CEO Scott Kirby and Moderna CEO Stefan Bancel. This is a show you do not want to miss. You could, but you really do not want to. Julie, back over to you at the Wi-Fi Interactive. Really a crazy morning for all things stocks.
Yeah, a huge upswings that we're seeing in the equity markets here this morning because of that more benign than estimated CPI reading. Consumer inflation, as we mentioned, rising 0.1% month over month. That is the smallest increase in more than a year. Even if you back out food and energy, you still get an increase of only 0.2%. That works out to 7.1% on the headline year over year and 6.0% on the core. We're going to dig more into this later, but first got to talk about the market reaction. We are seeing a big bump up in the futures, and the bump, by the way, actually started a little bit before the data came out. So there were some questions around the release of it a little bit earlier today. Looking at Dow futures, we've got a boost of nearly 750 points, and NASDAQ 100 futures, which have been the most sensitive to changes in perceptions of where interest rates are going, seeing the biggest increase up by nearly 3.8%. And we also, of course, have to talk about what's happening in terms of interest rate perceptions with what's going on in the Treasury market. So here we see prices going higher. That means yields are going lower. So effectively, the market is extrapolating this number to mean that perhaps if inflation is coming down faster than expected, the Fed's not going to need to be as aggressive with interest rate increases. Of course, the Fed is bringing us interest rate increases tomorrow, broadly expected still to raise rates by 50 basis points, Sauce.